Hey everyone, and welcome back to Data Driven Value, where we show you the tools and teach you the skills to help you take your financial freedom into your own hands. So today I'm going to jump again back into a favorite topic of mine. That's the Bitcoin miners. We're going to look at RIOT platforms today. There have been some developments in terms of their overall strategy going forward. So we're going to take a look at that, kind of following up on my video covering some of the hybrid AI related Bitcoin miners. So yeah, we'll take a look at kind of a comparison against some other miners, as well as get into this news, and then we'll end up on the charts. See if we can't figure out kind of a way to kind of maybe trade this in the future. We will see going forward. So I'll just jump right into things here. Obviously, we see here, so basically, RIOT Platforms launches formal evaluation of AI HPC for 600 megawatts of power capacity at Corsicana. So again, this is their Corsicana facility. It's going to be about a 1 gigawatt facility, so that's 1,000 megawatts if you're unsure of the conversion. Obviously, we see here they're engaging expert consultants to assess AI HPC opportunities, plans to accelerate engagement with potential AI HPC partners. They've actually halted their previously announced Bitcoin expansion. So originally, this 600 megawatts was going to be used for Bitcoin mining. Kind of what we've seen is miners start to go into the AI side of things, look at a different source of revenue. So yeah, we will kind of get into that further in here, but yeah, definitely cool or interesting to note. RIOT definitely diverting a large amount of energy. 600 megawatts is no small amount, and the fact that this 600 megawatts is essentially it's essentially energized. They just need to outfit it with the right equipment for those GPUs, the servers, etc. So we will be following that, but yeah, huge power capacity here. Just for reference, Core Scientific's current deal with CoreWeave is for 270 megawatts, and that's going to bring in 4.7 or more, just over 4.7 billion in revenue over a 12-year term. So it works out to about $400 million in revenue per year once fully deployed. So this is going to be over double that amount. So obviously 600 megawatts, we don't know the deal logistics right now or any kind of future deal logistics. So that being said, it's kind of just back of the napkin math. We're looking at 600 megawatts, roughly double, let's say double what Core Scientific got there. So that's over $9.4 billion of revenue in 12 years, or essentially, almost like it'd be about $800 million in revenue per year for RIOT just from AI HPC. And that being said, they would also have a pretty substantial hash rate as well. Still, they're still targeting just shy of 40 exahash for the end of the year. They're still going to maintain that position as a pretty large scale Bitcoin miner. But that being said, they're also going to really secure themselves as a pretty large provider for AI hyperscalers, especially if they do have this 600 megawatts like pretty readily available, which from the sounds of it is kind of the case. So kind of just continuing on here, they do think that the mixed use of the facility could maximize shareholder value. So essentially, we do know Bitcoin goes in these cyclical runs. We go into these long bull markets and we go into these sustained bear markets. And bear markets can be really tough for miners to navigate successfully. You really got to focus on the fundamentals. Make sure your company's strong from a balance sheet perspective, as well as a production perspective, just to be able to weather that additional downside and pressure in kind of an unfavorable market. It usually is temporary, so we do see the stronger miners coming out of bear markets even stronger, but we see the weak miners, sometimes they have to turn off their rigs, it's not profitable enough. So again, we focus on the fundamentals, but again, so kind of just diversifying into AI just provides a different revenue stream. It can provide a predictable cash flow, but that being said, I have talked about how there are more constraints around kind of AI compute. You have more contractual obligations. The equipment and infrastructure necessary is a little different. You can't just plug and play from Bitcoin mining to AI. So it is a process that will need to kind of play out over a little while. So we do see here though, they're just evaluating the feasibility of this. Obviously, for artificial intelligence or AI compute uses, they've engaged Altman Solon, which is a leading consultant to the data center industry and other industry experts. And currently, they're utilizing 400 megawatts of Bitcoin mining capacity at Corsicana. And again, we talked about that extra 600 megawatts originally planned for Bitcoin mining. Now looks like they're probably going to kind of go the AI route. It seems to make the most sense. There is some speculation that CoreWeave might be interested in this infrastructure, similar to how they were interested in Core Scientific's infrastructure. And that's kind of why I'm bringing this to your attention. When we saw that deal signed with Cores, we really saw Core Scientific outperform the rest of the asset class for that year. We also saw TeraWolf garnishing a pretty crazy premium on their company as well. Again, with AI news, we've seen Cypher. They were trading up about 50% on news of a $50 million pipe investment. So again, news that we covered, all companies that we cover and we invest in. And again, we just want to position ourselves for the potential. You know, if we can buy a kind of a strong fundamental company that's relatively undervalued with a large potential for this massive AI revenue in the future, you know, it really looks enticing from certain perspectives. So just continuing on again, I'll get into kind of all the logistics, but we do see here, so they've engaged with preliminary discussions with potential counterparties for a number of months. So this isn't something new. They've been in discussions, you know, every miner I think has explored this opportunity. So again, we see here they're expanding and accelerating their outreach to potential partners in the AI HPC sector in parallel with the feasibility analysis. So both kind of looking at how much it might cost to transition to that AI HPC. That being said, in the Core Scientific CoreWeave deal, CoreWeave actually footed the cost to transition all the equipment. So we'll see maybe RIOT can get a similar deal like that. It would really be beneficial, you know, not have to tie up excess capital just to transition to AI, because that is going to be a bit of a kind of waiting period while they do that transition there. So obviously, you know, they're not going to be making money mining Bitcoin while they're transitioning those kind of that space, that infrastructure to AI HPC. So hopefully we can get a deal where, you know, maybe the hyperscaler is responsible for footing the costs. We do see miners trading at such a discount. We've talked about this a lot. It's relative to their data centers that they hold. So even for a hyperscaler to foot the cost of transition, you can still get really good value compared to the traditional data center valuations just by getting into these Bitcoin miners. Obviously, Bitcoin miners just interested in the bottom line. They want to make as much money as possible. So yeah, a lot of interest in AI and HPC, and I expect that to kind of continue going forward. We do see here, yeah, this is what they mentioned. It does present meaningful challenges and investments of time. So yeah, we did talk about that. Again, that's just part of the game. It hasn't affected Core Scientific negatively, so let's just consider that going forward. They also believe there's significant upside of their Bitcoin mining operations and have recognized the value of having long-term predictable cash flows from. So again, that's just about that blended source of revenue, not relying solely on Bitcoin or solely on AI, just kind of under different cyclical market structures. You know, if Bitcoin goes into a downtrend and AI continues to outperform, you know, you're gonna want that AI revenue to kind of supplement the lack of Bitcoin mining revenue in the near term, and kind of vice versa. Also, you can't ignore the price appreciation aspect of Bitcoin as well. So that's kind of, yeah, the miners, they definitely want to capitalize on as much price appreciation. But that being said, they're in a very kind of interesting spot right now in terms of valuations, where they can really garnish a large premium on their stock price. And yeah, so that's what we want to see, and that's why I'm really going to start focusing on the hybrid miners going forward. So CleanSpark is my biggest position, my largest conviction miner. They're a pure form miner. I like to diversify, so CleanSpark, Iris Energy, and Marathon are my three largest miner positions. I feel that's a good way to kind of capitalize on both the hybrid and the pure form side of things. That being said, going forward, I'm kind of really looking to start building positions in more of these hybrid miners. Look for potential opportunities, because we saw that crazy pump from Cypher. So 50% in 1.5 trading days. So the after hour session plus the subsequent trading day, they were up 50%. So a crazy move. If we can position ourselves in a pretty solid fundamental company that we know long term is going to be okay, not really worry too much about the downside, just build that position when it seems cheap, and then we wait for that inevitable news catalyst to kind of skyrocket us up. And then if we get a 50 to 100% gainer day, which in a Bitcoin miner is not uncommon, we actually saw days, if not weeks, where miners were running multiple X's last cycle as well. So again, really low market cap stocks. It doesn't take a lot of liquidity to move the price. So when we see these large investments, we see these large partnerships, it really sends the stock flying. And then because they're also heavily shorted, that further increases the upside trajectory, because shorts have to cover their positions, therefore buy the underlying asset, and it just increases that upward momentum. So again, lots of potential hype kind of around this AI kind of thing going forward. That being said, again, we want to make sure that there's at least fundamental value backing the company as well. We don't invest solely based on speculative hype. We want that fundamentals first, the technicals second, and then that potential news catalyst is just the icing on the cake, let's call it. So obviously we see here they have to reduce their previously announced mining hash rate. So originally targeting 46.7 exahash by the end of the year, lowered that to 38.4. So kind of 20% lower than their originally planned expansion, but again, that's expected kind of with this transition of such a large amount of energy here. Also see here, their capital expenditures at Corsicana will be reduced by $245 million. So they would have required $245 million to invest to fully outfit that energy infrastructure with Bitcoin mining rigs and equipment. So just by pivoting right now, and then again, if we do see the hyperscaler footing the cost of the transition, then we're going to see Riot with an additional $245 million of cash available to them. And that's going to be very, very good because it'll allow them to continue scaling their Bitcoin mining operations kind of outside that facility. Obviously, though, there is some risk. There's no assurance that their existing assets are suitable for AI HPC conversion, that AI HPC conversion can be achieved on financially advantageous terms, or that an AI HPC partnership can be negotiated on suitable terms that provide sufficient value for shareholders. So a worst case scenario, essentially, they go through all of this due diligence, they don't land a deal that looks accretive to shareholders, and they've just wasted all that time and that potential where they could have been mining Bitcoin. That being said, just based on kind of some of the players that they've engaged, and kind of some of the other miners really being able to transition their own facilities, I do think there is a pretty good chance that Riot will be able to kind of achieve this. We will kind of just pay attention going forward. So flip over here, we see this is kind of one of the players that's really kind of taken a stake in Riot here. So we see Starboard Value taking a stake in Riot Platforms, eyeing that AI shift. Obviously, do see here, Starboard Value is urging Riot to repurpose some of its Bitcoin mining capacity for hyperscalers, obviously large data center users, typically AI or HPC companies. The newspaper cited that they have had talks that have taken place, and Riot was quoted as saying, "We're committed to creating value for all shareholders, and we look forward to constructive dialogue with Starboard on ways to achieve this shared goal." According to the website, Starboard's main goal is to seeks to invest in deeply undervalued companies. So again, Riot is one that we kind of do consider undervalued. There are some underlying issues that I'm going to talk about. I have talked about them before, but that being said, this is kind of a later cycle, more of a swing trade type thing in my opinion. I might buy some if we see that news come out and we go up 50% or more, I'm probably going to take some profits off the table. A 50% move in a day is not worth kind of fading that. So if we do see that massive pump, definitely looking to take profits off the table. Long term, I have more conviction in my core cycle holds that I've been building for the last 3 years, but I kind of can't, again, ignore that obvious catalyst, that elephant in the room that is AI and HPC, and kind of the premium that some of these companies might see as a result of kind of expansion into that field. So we'll flip over here. We'll take a look at Riot's monthly production numbers here before we kind of get into my own numbers. So we see here they produced 527 Bitcoin. So they actually were one of the few, actually I think the only Bitcoin miner to actually surpass their production from the prior month. So really good job there. Also see 18,221 Bitcoin on their balance sheet. That, in addition to a very healthy cash position, will break that down as well. You see they're currently operating at 33.5 exahash per second. So definitely one of the top miners there. I think they're third in terms of hash rate right now. You see they did get $3.6 million in power credits. So Riot's part of these ERCOT agreements where essentially they curtail to kind of support the grid when they need extra power. And in return, they're paid these power credits. So they did get 3.6 million. I think that came out to just shy of about 40 Bitcoin, 37 Bitcoin. So if you added this on top of the amount of Bitcoin that they produced, you're looking at like 564 Bitcoin for the month. But they factor their power credits into their power cost. So that being said, we can't some people include this number in the overall Bitcoin mined as a Bitcoin equivalent, but because they include it in their power cost, that would be double counting that if we were to include it in both the Bitcoin produced as well as the power cost. So we just see here, just a good thing to keep track. Obviously, coming up here, You see their all-in power cost total 3.5 cents per kilowatt hour, so pretty competitive power cost. Fleet efficiency coming in at 21.1 joules per terahash, so kind of middle of the pack in terms of efficiency, not blowing anyone out of the water, but again, not as high as some of the other peers. So decent job from Riot. Nice to see them really beating their prior month production. One of the only companies, if not the only Bitcoin miner, to do so. And then this is what I wanted to point out, the only other thing in this report. So they have completed the commissioning of the Corsicana facility and are pleased to report all systems are now fully operational. So yeah, we will be seeing kind of that continued due diligence into the AI kind of side of things. But yeah, they do have that facility fully operational as of now. So great job by them. Moving on, taking a look just at their Q3 2024 snapshot here. So they produced 1,104 Bitcoin in Q3, kind of a little bit less than the prior year, but again, there was the halving event, as well as such a large increase in network difficulty and hash rate that was really hard for miners to kind of outpace that dynamic. We do see here 0 Bitcoin sold, so adopting that 100% HODL strategy, retaining all their Bitcoin for the quarter. Bitcoin held per 1 million shares, not really an important metric in my opinion. I think Bitcoin kind of based on the market cap is a bit more important because it kind of gives you a better valuation per kind of dollar of market cap. Their ending hash rate, 28. So nice to see they're already up to 33.5 from that 28 exahash. $85 million of revenue, so really good. Let's see if they're operating at this much, getting this similar kind of revenue going forward per quarter. We're looking at like 320 over 330 million per year in Bitcoin mining revenue, and then we talked about the potentially 750 million in AI HPC revenue once it's fully deployed. So if you had that in combination, you're looking over $1 billion of yearly revenue in this company on a fully deployed basis, assuming that Bitcoin is able to kind of maintain a similar price or appreciate. So yeah, this doesn't even factor in kind of the appreciation of Bitcoin. What we do see here, though, a net loss overall of 154 million. So lots of expenses here. So that's kind of 60 million in data center acquisition. This is kind of what I don't like. $30 million in stock-based compensation. So Riot missed their growth targets for 2024, but they pay themselves a ridiculous amount of stock-based compensation. I think it's one of the highest in the industry. So you see here, of this $154 million loss, 20% of that was just stock-based compensation. So it's pretty ridiculous to be posting such a large loss here and rewarding management so heavily. That's kind of ridiculous in my mind. It's kind of one of the reasons I don't really like Riot. They haven't always followed through on their growth strategy. They've always compensated themselves kind of a lot more than a lot of the peers. We do see here they lost 24 million on a derivative asset. It did gain a little bit of money on their Bitcoin held, but they lost $38 million on marketable equity securities held. So they purchased a bunch of bit farms trying to take over that company. Didn't go the way they planned. They're then stuck with this large amount of bit farms. Bit farms has bled worse than the other miners, and they're down $38 million on that investment. So interesting there, obviously. We would like to see better revenue, not such a large loss, and not such massive stock-based compensation for underperforming on their strategy. It doesn't make sense to me, but that being said, I'm not management, and long term I'm not a huge bull on Riot, but I kind of recognize the intrinsic value and I recognize the potential for that catalyst, and I'm gonna really try to take advantage of that, try to get a bit of a trade here. But again, I'm going to look to kind of capitalize on that on a short to mid-term basis, and then take that cash, as I always say, rotate it into your higher conviction plays on dips as well, really building those positions. We see for the quarter, they had 12.4 million in power curtailment credits. So again, that's factored into their cost of power here. Adjusted EBITDA of 3.6 million, and they've brought down their hash cost to $26 per petahash per day compared to that 45 from the prior year. So still doing good. They're bringing their hash rate up, they're bringing their efficiency down, and kind of their cost down as well there. We're going to flip over just to the current monthly Bitcoin mined. So we do have most of the numbers in. We do see here RIOT essentially, the only one to beat the prior month, as well as finishing in that top tier of kind of efficiency here. So good job from RIOT. We do see kind of everyone else not able to beat the prior month due to an increase in network hash rate. We'll flip down to this chart here. This is our kind of our more comparison from miner to miner. You see here, so kind of looking at these, obviously, RIOT looks really good comparatively. So kind of the more green, the better from a fundamental standpoint here. One of the bigger tier miners, a large portion of the network share, kind of middle of the pack in terms of efficiency. Large Bitcoin hodl, second in kind of the industry for sure. Large energy under management, large pipeline. Good growth last year with 150%. They did miss their target. That's not ideal, not what I want to see. And then we have their 38.4 target for this year. So it's only really implied growth of 14.6% on the Bitcoin mining side of things going forward. So just keep that in mind. Not the most growth planned, but again, with such a massive diversion to AI, you kind of expect that. Flipping over here, obviously $769 million of revenue expected for 2025. That's obviously going to be adjusted if they bring additional hash rate or bring on some AI chips if they're able to get that kind of done quickly. So we'll see going forward. Basically, their 2025 revenue divided by market cap coming in kind of middle of the pack. Looking all right. So they're not a pure form anymore. I'm going to update this. I'm going to call them a hybrid because they have expressed that. So not quite a pure form anymore, just due to the fact that they've really abandoned that kind of previous plan of those 600 megawatts for Bitcoin mining. But moving on, getting into more share price metrics. So really valuing the company kind of against its peers from a share price or market cap perspective, or kind of enterprise to market cap perspective. So again, you see the enterprise value exceeding the market cap. So that's really good. Actually, I would flip that green even for now. But you actually just see Mara's actually kind of outperforms their market cap. So you're getting more enterprise value than what you're paying for the market cap. So it just shows you, this isn't factoring in any kind of growth or revenues in the future because the current enterprise value is worth more than the market cap. They've got $1.76 billion worth of Bitcoin. They've got $619 million in cash right now. They've got a liquidity to market cap ratio of almost 60%, one of the highest in the industry. Their current ratio is really high, or really good, so they're going to be able to cover any kind of debt or liabilities with their liquidity position. Price to book, quite low. Debt to equity, quite low. Their EV divided by revenue is kind of middle of the pack, so not quite as undervalued as some of the peers. But that being said, when you look at all the major miners, so essentially just small cap miners are being valued on a lesser basis here. You do see kind of middle of the pack. They're all valued pretty similarly between 7 and about 12 for EV divided by revenue. We look at EV divided by hash rate, so kind of again valuing the companies against each other based on their hash rate divided by their enterprise value. So we see here again coming kind of middle of the pack. Same thing, market cap divided by exahash, just middle of the pack. Their all-in reported cost to mine is a little expensive. That being said, if Bitcoin's above 100K, that's still really good margins. We did see they diluted their company 24% in 2024, but that dilution was accretive. So they're able to grow their hash rate by more than 24%, just bringing that shareholder value. We see their institutional ownership kind of here at 46% and analyst price targets at $18. So not massive upside to the analyst price target, but that being said, I don't think any AI hype is factored into this stock. A 6% move is not really considered, hype in my opinion when you see Cypher moving 50% on a $50 million pipe investment. So you do see here, looking from a kind of share price perspective, a lot of green through here, looking quite undervalued compared to some of the peers. Again, the major issue I have with RIOT is not executing on their growth strategy and overcompensating management. If they can start to scale back that stock-based compensation, which I'm not sure they can, a lot of it is pre-planned kind of way in advance, and the sales are pre-planned. But that being said, it's just too much compensation for not enough execution, in my personal opinion. But there is still value there is still potential to trade it, and that's what we're going to do. So we came down here Previously, I shared this with you guys. I also shared it in Into the Cryptoverse Premium. I have a little miner analysis group there as well. So just kind of looking here, we saw with RIOT, these were the previous target ranges. We hit them perfectly. So our initial position in RIOT already really good, coming in low 630 here. So even if you bought at $7, you're sitting in profits quite nicely. Moving down here, we looked at our first range, our first target range here, $10 to $11, and we flip over to RIOT's chart and look where the low came in, guys. So right here, just shy of $11. So again, our technical analysis playing out as we kind of hoped it would. We're going to take a look at the momentum indicators. I talk about these to get a good idea of what might happen in the future. Obviously right here, this directional movement index, that's what I want to see. I want to see these two lines coming towards each other. You want to see the blue one cross on top of the orange, and you want to see this red line start to curl up, supporting that blue line there. That's going to be bullish momentum. Looking at our whale buy indicator, we haven't seen whales step in over here yet. So again, they just did their buying back here. It would be nice to see them step in here. If we do see that kind of AI catalyst, further advancement, a bit of hype come in, people start buying, then we might see that signal flash here. Other than that, we're looking at the RSI and the MACD. So MACD still curling down, not quite curling back up yet. So still maybe a little bit of consolidation to do, but looking pretty oversold from our momentum indicator standpoint. So it is supporting a decent opportunity for a continued move up here. Looking at this, obviously bouncing from this support zone here, kind of with confluence of our Bitcoin bull market support band. So again, beautiful bounce from our support zone, confluence of the Bitcoin bull market support band, and then just was kind of breaking out a little bit. But again, we need to kind of break these highs here before we can really kind of talk about a reversal or uptrend structure. But again, looking for additional buys, maybe back down in this area if we do see it. Otherwise, in a kind of worst case scenario, if we drop to lower levels, look to maybe buy some RIOT down here between 850 and about 930. Flipping over to the low time frame quickly, we do see here, look at that big bearish engulfing candle. So essentially, every time we've came up, we've just come back here. So, we want to hold this low here. If we don't hold this low here, then I think we just tag this support zone again, try to bounce from there and see what happens next. We take a look on the indicators on the low time frame. So we did see this cross here on the low time frame, but it's kind of curling back down, not really what we want to see. Kind of RSI, look to try and peek out again back into that bearish cross. MACD approaching a bearish cross. So again, we did see the whale buy indicator flash on the 4-hour rate here, just as we saw it flash back here. So interesting to note, last time that flashed, we ran from $6 up to about $14.50. So 200, over a 200% move right there. If we come back here again, look for that buy position right here, and we're gonna probably, this first trend line up here is gonna be a good resistance, but not looking, too crazy from the low time frame. We don't need to rush into anything. I just kind of wanted to get this out there, give you my thoughts, look at the chart, kind of discuss the potential catalysts going forward. RIOT is an interesting one. So we will pay attention to it going forward. Again, we want to try and capitalize on that potential AI catalyst hype news, but it's going to be kind of dependent on the general market kind of structure. So I have talked about some inherent risk in Bitcoin and markets. Again, we want to ensure that the overall macro environment is looking healthy, and then we can really start to try and build these positions for kind of the remainder of the cycle. So again, stick to the data, make a plan, and follow through when the time comes. If you guys like the content, if you learned something new, please like, share, subscribe. It all means the world to me, and I'll see you guys in the next one.